Some say that what we are seeing today is just like it was back in the 1970s. Others say it's 1929. Some suggest it's 2000 or 2008. But if you look closely, there are elements of each and every one of these, except we have never gone to these levels before. The first thing I want to look at today is the civil unrest that is brewing. You are seeing food prices rise, and what happens when food becomes too expensive? You got problems. The second thing is the Fed's dilemma. They are pushed into a corner right now, and everybody is waiting to see what they do. The third thing is the stock mania. Stocks are going absolutely ballistic, and I will give you a little breakdown of what's been happening. Let's begin. So let's talk. Supermarkets play supply chain whack-a-mole to keep products on the shelves. Retailers reroute shipments, expand storage to stay ahead of the product shortages. And I'm sorry for every Nutella fan out there. Apparently, it's hard to get. All right, look at this. You can scroll down in this Wall Street Journal article essentially saying on any given day, something is out of stock in the store. And that could be one thing or another, but ultimately what it means is that we are getting further and further into this, deeper and deeper. It's not getting better. And this comes from the higher levels. Kellogg's, Campbell's, Kraft, all of these businesses are talking about their supply chain issues. At the same time, guess what? They're increasing their prices. All right. You could see this. What orders showed up and who do we need to call? It's our battle every day. You don't want to promote products that you can't fill. You can't fill those on the shelf. So what are they doing? They're not necessarily doing what they used to do before. And that is, hey, every month we run this ad, this product's on sale, you know it every single time. You say, no, if I just wait 2 weeks, I know that product's going to be on sale. That is happening less and less and less today. They are just discussing, I've covered it in many different ways, but ultimately they're bringing stuff to the front where normally they wouldn't even have these type of products on the shelf. They're pulling them from the back. They're putting them up on the front, trying to fill it in, make it look more full as they always would do, but it's to an extreme degree today. The UK's ultra-competitive grocery market, where a handful of chains compete for market share, has long driven innovation, helping to pioneer online grocery delivery and click and collect, known as curbside pickup in the US. But it's gone to the next level. The next level. We are talking about next day, same day shipping, and even further than this, they've gone into 10-minute delivery. So you've got people waiting at these stations, simply ready to go. They get your food and they deliver it out the door. This is unbelievable. But with the supply chain issues on top of it, I don't know if this is going to be sustainable. We will see. Okay, how long this goes on for, what type of foods are affected here, and certainly the prices and everything in line with that. Take a look. Commodity inflation. Add European milling wheat to your inflation watch. I will talk more about this in a second. Front month European wheat prices are about to hit an all-time high, currently just a couple euros below the peak set in 2008. Is it going to stop now? No, of course. We are going to see this continue higher. That is an extreme example. This chart goes back from 1999 up until the present. And if you had talked about this, let's say 3-4 years ago, all right, anything, not just wheat, any of these other commodities, you looked at what happened in 2008. And it was such an extreme example that would never happen again. That was just, those crazy times. And now today, everywhere you turn, the prices have gone ballistic. This is just showing you the agricultural commodity index, which has again continued to rise. Looking at the wheat futures going up, they had bottomed out in 2016 and now have been rising along with everything else. Wheat closes at the highest since 2012 as food inflation fears grow. U.S. spring wheat, Paris wheat also soar. You look around everywhere, just like Brent crude, WTI, all of it. It's all going up, maybe to a different degree, and there might be, a chasm in between the two for a period, but they usually go in together just like any other commodity. This is just showing you the chart again. What this brings me to, the important part here, is not to talk about the baguette that this gentleman is holding, but what it means, and that is the food riots. When food becomes too expensive, people will riot. People will take to the streets. It's a simple matter of fact. This has been documented over and over and over again. It will happen in the developing world, and it will happen in the developed world as well. We are seeing the same exact events over and over and over again, and this is just one of the factors. The supply chain, the drivers, and all these different things they're talking about in the news. But on top of all of that, you've got the money printing, you've got the deficit spending. None of that money is actually going to help the people. None of it. And you look at the breakdown, when you see what's happening, it doesn't ever help the people. What we need are structural changes. We need a lot of it's hard to talk about. We need some big changes here. It's not going to be done at any of these conferences that are with the governments and so on, I assure you. Let's break it down a little bit, though, in the Money GPS Insights. I get a little bit tongue-tied sometimes. I get a little bit twisted up, and it's all because of how I see this system building up, okay? If you appreciate that information, hit that thumbs up. While stocks are going straight up, expenses, they are as well. You're seeing this across the board. Millions of people today are unable to keep up with inflation. It would be very wise for you to keep an eye on inflation as well as interest rates. These two things, very correlated, very connected. This is so important right now, not just for your retirement account, your investment account, but everything that you do, the real estate prices around you, and so much more. Yes, the Federal Reserve. A special meeting coming up, and I will have that full documentation for you where this may change the tone for the rest of the year. But this article, Fed confronts economy with the most widespread shortages since the 1970s. The word shortage appeared 70 times in the last beige book. The beige book is essentially documentation from all of the different banks, the Federal Reserve banks, and they just put together this report, and it shows what they are seeing in their regions. And they're seeing a lot of shortages. At least that's what they're saying. Now, what I want to talk about here is the fact that more important than all of this is the meeting that's coming up Wednesday, and they're going to dictate whether the taper happens or not. Taper meaning, of course, as I explain all the time, the reduction of the amount of money that they are printing, not tapering the actual balance sheet itself. It's tapering the purchases. This is just showing you the manufacturing PMI. The PMIs directly from IHS Markit are starting to come down. This line right here is 50. And that 50 line represents above being growth and below being contraction. And although it is still in growth mode, we are now sitting at about 57 or so. So that's coming down. We will see how long this persists if we start to see that come down below 50, which some suggest right now there's actually a recession happening, but we don't really know until we look in the rearview mirror. Things are certainly slowing down with not enough stimulus for this market, this economy as well, really addicted to it. When your rent goes up 40%, many tenants are seeing big hikes. I have heard from many of you talking about $200 increase and this much of a percent increase and so on. As the period of discounted rents in cities comes to an end, many tenants are bracing for steep increases that could force them to leave their homes. This is unbelievable to see the price, 40%. I mean, that is something that would, depending on where it was previously, was it 40% the other, like you're getting a 40% discount and now you're getting back to where it was. Who knows? But a lot of the people here are dealing with something that they simply cannot afford. They can't afford an increase right now. And, just let me know. Let me know what you are experiencing. Not you personally necessarily, but people you know. Are people hurting today, or is it prosperity all around? Let me know where you're from or this situation is from. Put it in the comments below. We got to talk about this. You thought it was a bubble in Canada, a bubble in Australia. But what about Amsterdam? Amsterdam real housing prices, the highest in 400 years. Housing prices in Amsterdam, corrected for inflation, have never been this high since recorded history. Next to low interest rates, the cause of rapidly rising prices is feedback cycle between the banks and consumers, having become addicted to mortgage lending and ever-increasing prices. I know specifically that so many people had in Amsterdam and the Netherlands, essentially, that had been borrowing a lot of money. They were able to get, at one point, I believe it was 120% of the purchase price. And then it went down to 106%. And then it went down from there. Look, just take a look at the chart. Hope my head is in the way a little bit. There we go. But essentially, you could see this goes back from 1620 up until the present. It's hard to rate 1620 up until now, but you get the point. It's that when you have extremely low interest rates, you have easy money policies, you push up assets in a way that doesn't make a lot of sense. There is no reason for real estate to increase in the fashion that it has. It is not a stock like Rivian, which we'll talk about in a second, okay? This company here, Amazon-backed EV startup Rivian, plans to price shares up to $62, putting the valuation near $55 billion, perhaps trying to ride on the coattails of Tesla, which has gone straight up. I think I have that loaded. You can see this, Tesla. It has gone basically, like I said, straight up over the last little while. But anyway, back to Rivian, essentially just talking about, you have certain stocks, growth stocks, that do considerably well. Who knows, this is going to IPO and we'll see. But what I'm suggesting here is that this is different than real estate. It's supposed to be anyway, but today apparently anything could be a risk asset. Rivian lures Blackstone close to IPO of up to $8.4 billion. I want to just tell you that it doesn't always end well. Squid Game is meme coin warning with wipeout after a 230,000% gain. So apparently this coin had nothing to do with the actual show, and it went straight up and then it went straight down. I hope there was some people that made some money off it, but all I'm trying to suggest to you is that it doesn't always end well. But this is a key indicator. If you stayed here until the end, watch this stuff, because it's going to tell you what's been happening and what will happen. Share buybacks are one of the most important indicators. Of course, you have the QE, you have the interest rates, but buybacks, share repurchases, extremely important. Why? Because this is the number one buyer. And you could see the buybacks by corporate clients peaking after the recent highs. Never seen anything like this before. Think about that. What does that tell you? It's that they believe the stock market is going higher. But will it? Let me know in the comments below. Don't forget to hit that thumbs up button, all right? When you do so, you support the channel, you make these videos more likely to end up in your feed, and it helps me out, so I do appreciate that very much. If you haven't seen this video yet, you definitely want to check it out, all right? Click it, and I'll see you there.